COVID relief and PPP, taxation of remote workers, a new administration. What does all of this mean for employers? This is the Issues Watch podcast. Hi, I'm Jeff Kazerman, Vice President of Government Relations at the New Jersey Society of CPAs, and welcome to episode 60. My guest today is Pete Isberg, Vice President of Government Affairs at ADP. He manages legislative and regulatory affairs on a wide variety of employment, payroll, and compliance matters. Pete also serves as President of the National Payroll Reporting Consortium, a nonprofit trade association whose member companies provide payroll processing, employment tax filing, and related services to more than 2 million U.S. employers. So he certainly is an expert on all things payroll related. And we're going to pick his brain today about a number of issues, including PPP loans, state taxation of remote workers, the prospects for more COVID relief, and more. Since things are rapidly developing on these topics, it's important to note that we are recording this on December 11th. Welcome, Pete. Thanks for joining us today.
My pleasure. Glad to be here.
Let's start with the topic on the minds of so many CPAs and business owners, the Paycheck Protection Program and other COVID relief programs. What are some of the current hot button issues with PPP loans and forgiveness?
Where do I start? Where I understand folks are generally on advice of CPAs largely is that forgiveness applications, the season's been open for some time, but it's pretty low volume because CPAs have been advising their clients to wait for potential additional legislation that would clarify that forgiveness is automatic up to $150,000, I think is the expectation. But the forgiveness applications are being processed. They are being received. There was a call yesterday with lenders that we participate in. And so they're describing kind of their views and perspectives. And they're noticing also that the SBA audits have begun. And so, basically PPP loans of 2 million or more are subject to audit, almost 100%. Below that, obviously, less than that, but there have been a number of, kind of critical GAO reports and others expressing concerns about the accuracy of these PPP loans and forgiveness. And so there will be audits. So just be prepared to substantiate, the claims of the Paycheck Protection Program, payroll amounts, other expense amounts. If you've got a payroll company like ADP, a lot of the reports that you need are sort of automatically there for you. All the calculations are done as far as forgiveness. There's a lot of very detailed calculations go into that. So hopefully you've got that nailed down, but just, be prepared.
Okay, that's good advice. As this pandemic drags on, do you think there will be a renewal of the program or an extension of the provisions in it?
We think so. That's the one of the elements that everybody seems to agree upon, which is good news. So we've seen a number of proposals in Congress in recent months. Even this week, next week, we expect something to be considered that might reopen the program and permit a second loan, a second draw from or for loan recipients who'd already received a first round PPP loan. So that would be good news. There's funding associated with that. So whether that gets done this week, next week, or, February, March, we're not really sure. There's kind of a brinksmanship thing going on right now. But that is one element that we do expect is probably going to be renewed.
Would that be part of the same discussions going on about aid to the states, or would that be separate?
It's in the same discussion. I mean, there are a number of packages, and that's one of the, key points that is, being debated. Do we want to provide aid to the states? If so, how much? So that's a kind of a negotiation point. But definitely, the aid to the states and PPP loans are in virtually every proposal to some degree or other.
Okay. With provisions of the, I hope I can say this right, Families First Coronavirus Response Act and CARES Act set to expire at the end of December. Is there anything employers need to know?
Yeah, well, hopefully they've been taking advantage of some of these very generous programs. The FFCRA is a mouthful, definitely, but it was very generous. So this provided 100% funding for employers under 500 employees to offer paid family leave, paid sick leave for employees affected by the coronavirus, or having to stay home to take care of kids, that kind of thing. That does expire at the end of the year. And there's a little twist, a difference in how that the FFCRA works, in that, you can have somebody on a valid FFCRA leave through 12/31. You might pay them for that leave in January. And so the question is, so do I get the tax credit in the first quarter of 2021? I thought the program expired in 2020. The answer is yes. You can, if somebody's on valid FFCRA paid leave in December through 12/31, and you pay them in January for that leave, then you might be taking a tax credit in January, applying it to your first quarter 2021 941. And the IRS knows that. They're going to, the Form 941 is going to be unchanged. So that's a little bit of a quirk just to be aware of. That employers might need to split a pay period. So the pay period might include, weeks in December and January. And if that's the case, you'll need to, kind of separately distinguish, how much of the FFCRA, how much was FFCRA paid leave, how much was just regular leave paid in 2021. And needless to say, this is also subject to extension. So we've been sort of expecting Congress to come back and say, well, this has been a great program. And by the way, COVID's not solved. Why don't we extend it? But will they get around to that before December 31? We don't think so. And so that might be February, March, retroactive reenactment. That could be a difficult thing for employers.
Another issue that our members have been speculating about is how states, from an interstate perspective, will be handling income taxation of people who are working remotely. What can you tell us about that?
That is a big evolving issue. And I think people are just becoming aware of it. Gosh, where do I start there? The issue is, if you've got people who are, they have been working in the office, and suddenly because of COVID, they're working from home. Well, what if home is in a different state? So the rules for, the employers have to pay careful attention to where their employees work. If somebody is working in a different state all of a sudden for an extended period of time, they're supposed to change the withholding and reporting so that that other state is getting the withholding and the employee has to file a tax return there and so forth. How does that work in the COVID environment? There have been a number of announcements, including by the New Jersey Division of Taxation and Pennsylvania Department of Revenue, for example, saying, for instance, that look, if people are working from home temporarily as a result of COVID, we're not going to take advantage of that. The normal rules aren't going to apply. You don't have to recognize that, and especially for other purposes, nexus. We're concerned about obviously a payroll company is concerned about withholding. How's the withholding going to work? But it's almost a bigger issue of, well, if you got employees in a state in which you're not already registered, if you start to withhold taxes for them, you've got to register with the tax department. You're maybe also subject to corporate income tax filing responsibilities there, and also sales and use tax, things like that. So suddenly it's a bigger question of, do I recognize that I've got employees in a different state, and now am I, subject to all kinds of new filing requirements, things like that. That is going to play out. Now there were provisions, and there's a multi-state mobile workforce bill in Congress that's been there for quite some time to set up a uniform standard, because the standards for how long somebody can be in a state varies considerably. But it wouldn't really help in the COVID environment. People have been working at home for months now. And there was something in the HEROES Act and in the HEALS Act earlier this year that would have dealt with that. But again, those thresholds have long since been passed. People have been, working from home for many months. And so the question is, are employers going to have to, literally figure out, well, now I've got employees that used to work in my office and now they're in 5 different states because I'm in this tri-state area. And now I have to register with all these different states. the long-term answer is that maybe yes, maybe you'll have to do that. I don't see Congress coming down and saying, states, you really can't tax these people. And the states are being somewhat aggressive about protecting their revenue. Needless to say, they are hurting for revenue like everybody else. So they're not going to be easy about this question. So it's a very big issue that is evolving. And I think we should see a lot more attention to it in the coming year or so. But I think that the advice for employers at this point is to take a good look at where your employees are working. And if it's working from home in a different state, you might want to think about, am I registered there? Do I need to start withholding and reporting there? Technically, you probably do.
Actually, that mobile workforce legislation is something the American Institute of CPAs has been pushing for years, it seems, and obviously we support it. Can you tell us what's been holding that up? I mean, it seems like a very common sense proposal that wouldn't really hurt anybody. And maybe I'm naive about that.
Yeah.
What's holding that one up?
Well, it is opposed in the Senate in particular. There's opposition to it. The argument from the state's perspective is that it infringes on state sovereign authority to protect their own revenue, generate their own tax revenue streams and so forth. They need to be able to make their own decisions. It's really an existential threat for states if you're talking about limiting their ability to apply taxes to people who are arguably benefiting from the state's protections and so forth. So there are many states, New York in particular, that have a lot of revenue at stake that, based on the current rules, if you were to wipe away the current rules and come up with some sort of simplified threshold, it would be easier for employers, but the state itself would lose a significant amount of revenue. And so there's opposition from that perspective.
Oh, okay. I was unaware of that. Are there any other legislative or regulatory issues that CPAs and business owners should be keeping track of?
There's a few that I wanted to mention. One is maybe a reminder, but you started off the discussion this morning with hey, the CARES Act, the FFCRA are expiring. What does that mean? One thing I wanted to mention was that also means that the Social Security tax deferrals are ending, and that from mostly employers have taken advantage of the deferment of Social Security employer taxes. So that'll stop 12/31. Just be aware of that, and that I think the punchline there is that start to prepare to repay that. That'll be due. 50% of whatever was deferred in 2020 will have to be repaid in December 2021, and it could be a very significant amount. I mean, if you've got somebody that with just 20 employees, that's the equivalent of an entire year's salary for one employee. 50% of that is due in 12 months, basically 50% after that. So, you don't want to wind up owing the IRS a significant amount of money. Employment taxes are not dischargeable in bankruptcy. So, be careful about being sure that you can repay that. Second point, and this is not COVID related, but, New Jersey in particular was one of 4 states that enacted their own individual mandate, right? So for health insurance, like the Affordable Care Act, the Tax Cuts and Jobs Act, eliminated the penalty for failing to maintain health coverage. New Jersey enacted a state level variation of that. And this is year 2. So there was employer reporting for the first time last year of health coverage provided by employers to employees, very detailed reporting, the same thing that the IRS requires in terms of, tell me every employee and all their dependents who were covered under your policy. This is year 2, and year 2 is an important one. That's kind of usually the year where enforcement is likely. So if New Jersey employers weren't aware of that, and if they're self-insured in particular, they'll be the ones that doing the reporting to the New Jersey Department of Taxation. So take a look at the New Jersey DOT website for details there, but that's definitely in place, needs to be paid attention to.
Okay. Last question here. What impact do you think the Biden administration will have on legislation and regulations related to businesses? For this upcoming year, do you expect big, bold moves or just tweaks of what already exists?
I would trend toward the big, bold moves, frankly. I think, they're going to want to come out fairly strongly on some points and reverse some of what the current administration has been doing in recent years. There's a lot of thinking about, what should the agencies, once they're stood up with the new leadership, what are the first moves they should make? The Biden administration is expected to really come out very strongly on some sort of COVID response right away. So that may take the form of legislation. I mean, we expect a very big package of supports and stimulus, but we also expect a very strong, almost immediate, like literally on day one, we might see an executive order to the effect of, employers are going to be subject to new OSHA guidelines of, exactly how you need to, protect your employees. So, and if you want sort of a heads up on what that looks like, take a look at the Cal OSHA, California, their OSHA agency issued a 21-page, document describing all the requirements that's in place today that employers have to take, all the actions that employers have to take in order to protect their workers. And, it falls into, as you would expect, you've got to establish a system of communications, a system to test employees, and be able to respond if somebody lets you know that, oh gosh, they tested positive. What do you do about that? You've got to have a system in place to do something with that information and notify the people who are affected potentially. There's got to be, anyway, it's a fairly detailed set of requirements, but I think we can expect the Biden administration regulatorily to come out with something pretty strong almost immediately, followed by legislation. The other thing I'll mention is, in terms of regulatory enforcement, is the Department of Labor, for example, is supposed to enforce that FFCRA leave requirement. And one of the things that it was, I think, noticed and maybe a subject of some concern is that although the FFCRA leave requirements was, they were a mandate, employers were required to offer this leave and they were required to administer and so forth. The usage, according to the IRS, was much, much lower, like 1%, than they expected. And so the probable reaction from the Department of Labor under a Biden administration is maybe to come out and say, well, we're going to really audit employers and ask, did you offer this? Did you let your employees know that it was available to them? Did you administer this? So, from the CPA's perspective, you may want to just, be aware, talk to your clients about, have they been offering that? Make sure that you've got your documentation in place in case it comes up.
Okay, Pete, this has been great. I know I learned a real lot here, and I'm sure our listeners did also. So again, thanks for joining us and all the information you shared.
My pleasure. Anytime. Thank you.
Thanks again to Pete Isberg for sharing so much important information as we close out 2020 and head into 2021. Also, I want to thank ADP for their long-standing relationship with the NJCPA. To learn more about ADP, including free payroll processing and other services available to NJCPA members, visit adp.com/NJCPA. Our Issues Watch podcast is taking a short break for the holidays. Watch for our next episode on January 19th. In the meantime, check out the NJCPA's new Tech Talk podcast, which will be launching in January. Even though I won't be hosting that podcast, I'm sure it'll be good. Get a preview of Tech Talk at njcpa.org/Tech Talk. Thanks for listening and happy holidays.